Good morning, everybody. We have a higher trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. March corn futures up 2 cents at 425 and 3 quarters. January soybeans up 11 and a quarter at 1169 and 3 quarters. March Chicago wheat up 10 and a quarter at 593 and a half. March Kansas City wheat up 9 and a quarter at 560 and a half, and we have March spring wheat up 6 and a quarter at 561 and 3 quarters. It is report day today. USDA will release its monthly crop production and WASDE report this morning at 11 o'clock Central Time. Traders expect generally a friendly tone here. The trade largely expects smaller carryout projections for U.S. corn, U.S. soybeans, global corn, and global soybeans. We're looking for an across-the-board cut to South American production estimates: Argentina corn, Argentina soybeans, Brazil corn, Brazil soybeans. So friendly tone expected. You've got a little bit of strength here this morning. Implied U.S. gasoline demand fell to its lowest level since late May last week. Additional COVID-related lockdowns, restrictions have resulted in less driving. Weekly gasoline demand was down 4.7% on the week. It was down 14.5% versus the same period last year. Now, the implication for us here as people involved in the grain markets would be ethanol, of course. And we've got some potentially problematic issues here. U.S. ethanol stocks continue to build. Stocks were up 4% on the week. They were up just 1% versus the same week last year. So we're not at a level yet that is problematic. The issue here is that, first off, stocks have increased by almost 13% from their October low. And ethanol production, despite this big drop in gasoline demand, has not backed off. As a matter of fact, we had our best week of production, 991,000 barrels per day. Best week of production since March, I believe. That was up 4% on the week, still below last year. But the problem here is that you've got a surge in ethanol stocks, higher corn prices, reduced demand for ethanol, and they have all resulted in very poor ethanol production margins moving forward. For the first quarter of next year, production margins are negative 10 to 20 cents a gallon on the board at least, and regionally, of course, that's going to differ a little bit. But we could run into a scenario here where ethanol production again falls off quickly over the next several weeks or months. Of course, a lot of this has to do with what happens with gasoline demand. How fast can we get the economy back on track with this vaccine deal? There's a lot of question marks here, but if we don't get this gasoline demand back up and this demand for ethanol back up, there is very much a risk of lower ethanol production in the coming weeks and months, in my opinion. The Brazilian government had their crop report out this morning. CONAB pegged the Brazilian bean crop at 134.45 million metric tons. That was down from their most recent or their last estimate, but that's still way above just about any other estimate that I've seen out there. They pegged the corn crop at 102.6, which was down a little bit. So these estimates from the Brazilian government are larger than what we've seen from a lot of the private groups. You know, with this 134.5, CONAB, or the Brazilian government, they are above the average trade guess for today's report by a good 2.5 million metric tons. They're above some of the lower trade estimates for Brazilian soybean production by a good 5 to 6, even 7 million metric tons. So I don't know who's right and who's wrong here. We know that they've had some weather issues there, but things have improved certainly. Private group Ag Rural lowered their estimate yesterday or earlier this week. 131.6 is their number, down from 132.2 previously, citing concerns regarding dry weather, of course. The corn market has acted okay here. We were able to break the streak of lower daily highs on the daily chart here overnight and this morning. I talked about it in that corn market episode I did yesterday. So that's a positive factor, I guess. But still, we're kind of in the middle of this range. I mean, you've got that high up at 439, and then you've got that support level down around that 414 or 415 nearby March futures. So everything today will be about the report. You know, I expect a little bit of volatility around 11 o'clock Central Time, I suppose. Soybean market, I think, has acted incredibly well. I really do. do, given the fact that we have some bearish factors that have emerged here. Drastically reduced export sales, improved South American weather, and beans are, 32 cents from contract highs this morning in this nearby January contract. So it's really a good action, in my opinion. Now, could today's report change that? Certainly could. We'll see what happens at 11 o'clock Central Time. Fund traders are still very heavily long the row crop markets to east. They're probably about flat, the SRW wheat market. But at yesterday's close, the private groups estimated that funds were net long 263,000 contracts of corn and 183,000 contracts of soybeans. Those are very hefty net long positions historically. Cattle market was mixed bag yesterday. We had lower trades in the nearby December contract in cattle, which is in delivery. January feeders were down a little bit, and then the rest of the board was higher. Cash has been slipping in cattle a little bit. I think we saw some stuff as low as 104.5 yesterday, up to 107. The box beef market was down sharply again, and that's been a trend here this week. Ahead of the cash open, the Dow Jones is down 40 points. S&P is down 10. Bonds are up just a little bit. U.S. dollar unchanged. Crude oil is up 55 cents at 46.07 in the January WTI. Precious metals are mixed. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, go to that website, sign up. It's $49 a month. You can cancel it at any time. There's no other fee, no other obligation. I won't try to sell you anything else. It's simply an email paired with a text message service. I'll let you know exactly what I'm doing every day of the week. Remember, report today at 11. We'll talk to you a little bit later.